Okay, good afternoon, everyone. Welcome to this entrepreneurship workshop sponsored by the World Bank Family Network. This is the second of 3 events into the Ideas into Action series, jointly organized by World Bank Family Network, IDB Family Association, and IMF Family Association. The session today will focus on structuring and launching your business. And I would also like to welcome and thank our keynote speakers and panelists participating today. Their business cards and other material will be available for you to pick up after the session on the table outside. Please note that this event is being recorded and will be available on the WBFN website. Now it's my pleasure to introduce the moderator for this event, Yvonne Quahe, who is Career and Program Advisor at the World Bank Family Network. Thank you.
Thank you, Gisele. Good afternoon again, and thank you all for coming today as we talk about structuring and launching your entrepreneurial business. So in this room full of would-be entrepreneurs, let me introduce you to our expert panel. This subject can be somewhat overwhelming, so we have this expert panel, so it'll stop you from stumbling. And then later on, we will ask 2 panelists. You may be wondering why they came and they went. They haven't really gone, they're here. And these are our real-life entrepreneurs who will then share with you what life is like when the rubber hits the road. So we have our keynote speakers, and I'll introduce you to them. So with that overview, this is very helpful, and I will ask Joan to kick off the keynote.
Okay. Thank you so much for having us today. I appreciate this opportunity, and it's nice to be before you all. So we'll start with the overview, the structure of the various entities that you can consider when starting your business, or those that have already started. You can also make changes. So we'll start with the C Corporation. Its profits are taxed separately from its owners, meaning that when a C Corporation is started, it is its own entity, pays its own taxes, and the shareholders, if any dividends, they pay taxes on that separately. So maybe some of you have heard of double taxation, and that's where it comes from, that the corporation is taxed, and then the shareholders are taxed on dividends. And then there's a partnership entity. So that's if two or more individuals come together to form an entity together. The profits and losses or the outcome of their businesses is split amongst the partners depending on their pro rata share. So it depends on what your agreement is when you set up the partnership as to how the net income or loss will affect you personally. So it can be 2 or more persons in a partnership. An S Corporation, why people like this is because the double taxation is not factored in that whatever the net income or loss of the business, it is shared personally by the shareholders. So it flows through to your own personal tax return. So it can benefit you in ways personally, depending on the outcome of the business, but the entity itself is not taxed, just you at the personal level amongst the shareholders that are involved in the entity. Okay. Does anybody have any questions thus far about that part? Okay. Then there's the C, the Schedule C, this sole proprietorship, a sole proprietorship. That is the simplest entity to set up. Most people start that way because there's not a lot of regulation involved. It's very simple. You know, you can just start, with yourself, with whatever tools you have, and go into business. You just register and open your bank account and just start, doing what you do, whether you're a consultant or you sell products or what have you. It's the easiest one to start with. And what I share with individuals that are like, well, I don't know which way to go, I don't know which entity I'm thinking about. Initially, I say it's easier to start as a sole proprietor if it's just yourself, because you want to feel out how your business will function, how it will work. Are you comfortable with this? So it gives you opportunity to get a real feel for the business before you get into all the legalities of, I'm a corporation and the demands that are required and the reporting requirements in those. So lastly, there's the limited liability company. So there are people that believe it means they're incorporated. It is not an incorporation. It is just a company that protects you legally, and it's mainly recognized by the states. So it gives you limited personal protection from the business, just limited though. And as far as the IRS, it is a disregarded business, but without getting into too much right now from the structure, is that you can be taxed as a corporation, or if it's an LLC that has partners, you can be taxed as a partnership. So there are many more nuances to the LLC, in that it can be an individual member that is treated like a sole proprietor, or you can have partners and have a partnership LLC where you're taxed as a partnership. Okay, so that is how the structures of the businesses are developed, and those are the choices that you have. Now there are many more ways you can go. These are the simple overviews of the various structures, but you can get a little more intricate in that form depending on what you're trying to do business-wise, what your goals are. And one of the things I want to emphasize today, how critical and important it is to consult with an attorney and an accountant early, because they will help and guide you, we will help and guide you through making those critical decisions, so that you don't get yourself into something and say, oh my God, I've really got to figure out how to get out of this, So it gives you the guidance that you need and the advice to help you make a sound decision regarding that. So one of the first things you do is you go to your state, whatever state you decide to open your business in, and the registration fees, they're not too bad in most states actually, but in the DMV, Maryland, Virginia, $100, and DC, $250. It's important to know that once you register, you will have to pay these fees annually, because it's a way of them keeping track of you, just being aware that the business still exists. So you will have to pay those fees annually. But I also want to say about Virginia in particular is that it's important to also know, if you're open in Virginia, you also have to think about the county you're in, because there's also filing fees and regulations on the county level. As far as paying, I don't know if any of you've heard about paying personal property tax. You have to pay taxes on your office equipment, office assets, whatever you have in the business. Everybody wants a piece. So it's important to know what your county needs as well, because there is annual reporting with them as well. So I just wanted to emphasize that the cost does not stop at your initial registration. And so the next thing is the taxpayer ID. So that's pretty simple. You go to the IRS, and we'll show the website later, but it's the IRS, www.irs.gov, and there you can get your, you can get your tax ID number, and basically it's just filing online. As you know, many agencies are trying to do everything online more, these days, and so you can literally go on there and get your ID instantly, and go to the bank and open your bank account. And so when we get down to setting up the banking, so you've set up your company with your state, you've gotten your tax ID from the IRS, now it's about choosing banks. We didn't list any particular bank, because the best bank is the bank you bank with, because they know you, they know what you're trying to do, hopefully the branch manager, or if they have a business manager, that you're developing a relationship with them beforehand. And I will say, in regards to banking, this was one of the best advices someone gave me too late. Okay, so I'd started the business, and someone said, well, you should get a line of credit. And this is when I was working, and I said, wow, I never thought about that. Because inevitably there are ebbs and flows in business, and you want to have a safety net. And so while you're at the point where you're not overly concerned about, you know, your how the business is going, how it will work out, it's a good thing to look at. So while you're looking at your banking, you're developing relationships with your banker, so that way they know the ups and downs that you may be going through. They're able to support and guide you. So yeah, I say the best bank is the bank you bank with. So I know a lot of people are using credit unions. Some credit unions now have business banking, which is very good. It's a good benefit. And so yeah. Does anyone have any questions? Okay, yes, sir.
So I have a question about the registration state. Any company try to choose Delaware as a registration destination? So what's the implication to choosing different state for registration?
Okay, we're going to go into it a little later in the presentation, but to quickly say, I pretty much say open in the state that you're in, because regardless of which state you choose, if you do business in another state, you're going to have to register as a foreign entity. And so, as I was saying earlier about taxes, everybody wants a piece. So the state that you're working in, if that's where the main core of your business is, it's a lot easier. And if you're not like at the point where you're expanding everywhere, then you don't have to worry so much about the other states. But just to know that if you're doing business in a state outside of your state, they're looking for you outside of your home state, wherever you register. They, want, you to register in their state if you're doing a significant amount of business.
Yeah, no,
Michigan may have.
I'll just add that if you're living in Virginia, Maryland, or DC, and you open an entity in Delaware, you're really setting yourself up for some scrutiny there, because Delaware, Wyoming, some of these states, they're considered U.S. tax havens. And under the updated OECD, BEPS, CRS, I think in the future, some of the benefits you may have from incorporating in those states will not be available to you, just as the folks that tried to go to Switzerland to put money in foreign bank accounts and things like that. The same kind of transparency rules will come into effect for those states and those jurisdictions. So you really have to have a good reason why you're operating and owning an entity in Delaware or some of those other states.
Yes.
Could we hold the questions, because we have
thank you all.
speakers? So you'll get your opportunity. So Shavon?
I'm an
Oh, okay.
Great. So I am going to start off speaking a little bit about work authorization and then touching on some of the points that Joan mentioned. I do want to start by saying that I am not an immigration attorney. And one of the first things you learn in your business is that you will have to engage lots of professionals who specialize in their thing, because you do the thing that's the business, and you're going to hire people to help you with other things. So that may be, something you look into. But as a general rule, there are work restrictions. If you are not a U.S. citizen, you generally can start a business, but you are not necessarily allowed to work in that business unless you have the proper work authorization. There are E1 and E2 visas that are specific for entrepreneurs, but there usually is a lot of money you have to invest in the business for that. You may be able to be an officer or director of your company, but it's when you gain income for working in the business where you have to think about work permits and green cards and other issues related to that. And then really kind of pulling back on some of Joan's points about filing and setting up the business, one of the first things a lot of people do is you incorporate. Most states, especially DC, Maryland, they make it very easy now. They kind of creating an ecosystem to help people start businesses, that you can do most things online. And not only can you do them online, there's usually a lot of resources and information online about registering your business as well. So usually I will counsel a client on what sort of entity to choose, but if it's going to be an LLC, I may walk them through the steps so they can do it themselves online. But in addition to incorporating your business, there are a lot of other things and documents you'll need with the state as well. You'll need business licenses. You'll need to register with taxing authorities and the county taxing authorities, as you mentioned. You also need to renew those documents. Not only the incorporation, but also renewing your business licenses, usually every other year or every 2 years, depending on where you're incorporating your business. So there's the selection of the entity, but there are also all the other documents that you will need to legally operate in the state as well. So next, let's thinking about the registered agent, which is another thing you have to do to legally operate in the state. So the registered agent is the person that the state will talk to about your business. You can be your own registered agent. You can hire a company like LegalZoom to be your registered agent, but that person does have to be in the state where you're operating. And once the state sends you something to that address, they don't care if you didn't get it. Like, this is your address on file, and that's who we speak to about your business. And that's also, if you were ever sued, your business was sued, that's also who will be served with the lawsuit for your business. So you may not want to choose your best friend who you may not be responsive in getting you information as your registered agent. Sometimes a company is a best choice, or if you're not going to be your own registered agent. Next, licensing and zoning is big when you're starting out. One, in terms of licensing, which I'll talk a little bit about more, you will need you may need a specific license for what you're doing. So if you're consulting, you may not need a specific license, but if you have a bakery or a child care or something where you're really kind of interfacing with the public like that, you will probably need some sort of extra licensure for your business. So for instance, in DC, you would get a basic business license, but then you would need an endorsement to that license for whatever particular activity you may be doing, and you'll have an application for that, and there are extra fees for that as well. In terms of zoning, if you are operating out of, say you rent office space from someone, that building will likely have a certificate of occupancy. So you may not have to think a lot about zoning and that for your business. But if you are operating from a space that you're going to convert to some sort of use, then you'll have to apply for a certificate of occupancy. Or, like most people when they're starting out, if you're working out of your home, then you also have to get a certificate of home occupancy for your business. And again, that's something you apply for with the state. And I think something to always remember is all these things cost money. And they cost maybe a different amount depending on what state you're getting them from. And then one of the questions was about where to incorporate business. I usually advise people, especially when you're small and starting, that where you're living is likely the best location if that's where you're going to be doing business. Delaware is a popular choice for lots of reasons. One, investors may be familiar with it. If you're getting venture capital funding, that may be a requirement for them, but usually they'll have you convert your business after you get your first round of funding. And a lot of reason why people would choose Delaware is it was seen as having kind of a developed body of law that dealt with corporations and LLCs. But I think lots of states have, are developing that law, and more importantly, they will look to the law of Delaware in coming up with a decision that may deal with a corporation or an LLC. So I do agree with the point raised earlier that going to some of these tax havens may not necessarily be the best choice for your business. And then also cost, as you saw on Joan's sheet, it is more to incorporate in DC than it is in Maryland and Virginia. And taxes are different in different places. So that may be a guiding factor for you as well, is what are my total costs going to be to, on a yearly basis to run and operate my business. So, legal documents. So after you have all your documentation with the state, for the most part, there aren't a lot of mandatory documents you need for your business. For instance, if you have a limited liability corporation, you would have an operating agreement with your partners, or if you're a single member LLC. But there's no requirement generally that you have that document. But if you don't have that document, then you are stuck with what the state law is for your entity. So you are defaulted back to the code or the statute that deals with limited liability corporations. So it's usually best to come up with your own governing documents for your business. So that's what you turn to if there's an issue or problem. So just thinking internally for your business, partnership agreements with your partners, operating agreement if it's an LLC, shareholder agreements, employment agreements. Employment is generally at will, but it may be a skilled professional that you're working with, so you may want to have an employment agreement. External agreements you may need, so this are individuals who are outside of your business that you're interacting with. Independent contractors who are not employees, but they're people that you're contracting out to work with your business. Joint ventures, if you are teaming up with other businesses. Contracts with your customers, with your vendors. And I say, contracts are obviously going to be very different depending on what the contract is, but as a general rule, you want to have a description of the relationship, payment, so how much does it cost, who's paying who when, how long is the duration of the contract, how are we going to manage and protect our ideas, so protecting your intellectual property, and handling disputes. What happens if something in this arrangement goes awry, are some of the big areas you want to have in any sort of agreement you have. So business name versus trade name. As in a business, you're obviously going to have varying forms of intellectual property, things you write, customer list. But for many businesses, your name is probably starting out the most valuable thing. So your legal name is the thing when we talked about registering your business. That's what you put on your corporation form to do business with the state. But you can operate under a different name, a fictitious business name. But you also have to register that with the state as well. But when you're interacting with the state, if you're doing an official document, it's almost like signing your legal name. You want to make sure you use that name on those documents. And finally, thinking about estimates. When people think about accountants and lawyers, they obviously get nervous about the cost when you're starting out, and it is a lot. But I say the best thing is to find, professionals you trust, have a conversation about what do I need for my business, and come up with a budget. And really, there may be fire drill things that you have to do right away, and there may be things that you could wait a little bit to do, and there may be things that you can do yourself. Or that you can do in conjunction with a professional. That if you do, I always tell a client, if I review an agreement, I'm probably going to charge you less than if I have to open up a document and draft it from scratch. So just working with professionals to come up with a budget that works for your business.
Dan,
Right.
Mishkin?
I think we're going to Joan for premises.
Turn on the mic.
Okay. So, Siobhan mentioned a little bit about, mentioned a little bit about premises. So that, it depends on your business, it depends on what kind of business you're opening, and personally, it depends on how you feel. So if you're a person that, wants to, work in their pajamas and they can, and they're like, okay, you know what, I don't want to get dressed, I'm free now, I'm on my own, I just want to dress like I'm on my own, you work from home. But there are many options these days regarding where I work. So there are the shared office suites that are popping up everywhere, and they're in new and interesting ways. When it first started, it was very limited in that it was a corporate setting. You could either rent an office or rent the conference room when needed, and they have those kind of agreements. But now if you, as I was doing my research, you see all kinds of workspaces where you can do group workspaces, and you can have an individual office, or, there are so many options these days on how to do it. But additionally, what I did last summer, in looking for space again, I went back home and, really like the idea of being out. Being an accountant and a tax preparer, it makes it easier for people to visit you. So I went out and I went on Craigslist. And there are actually businesses that may have a spare office in their office space. Some attorneys do, some accountants do, where where there is a shared environment of sort, but you still do have your own exclusive office as well. And there's, where there's a conference room, and so it just truly depends on what kind of business. Now, the cost, if you want to do brick and mortar, it can be very expensive. You're talking anywhere from, let's say, $21 a square foot to $30 in the 30s. And it depends on what type of building. Do you want Class A building, which you're talking $30 and $40 a square foot and above? So it just is so, in regards to budgeting, that's important to do your research when you're thinking about, whether to work outside of your office and what kind of office environment works for the kind of business that you have. So that's what I wanted to say about that. And as far as, as Shavon said, registration. So if you do a home-based business, it's important that you register with the state and say, okay, I'm running a home-based business, even if it's for consulting. Whenever we're working from home, that's still, somebody wants to know about it. So that's important to know. And working from home, you get deductions as long as you have an exclusive space that's designated for the business. You can't, be a place you hang out or sleep in or eat in or, you can have your lunch there kind of thing. But some people, will say to me, well, it's part of my living room. Well, if you could square it off somehow, that kind of thing. But they would prefer that you have a designated space that if they did come to audit, and as I understand from some of my colleagues that they have done it. They have actually gone to audit home-based businesses. Okay, so accounting issues, setting up your accounting system. So I say the best accounting system is the one that you will work. So as long as you're going to do it, then that's great. A lot of small businesses start with Excel, which, I encourage them, if that's what you're comfortable with, you set up a simple P&L and you can track your income and expenses that way. Outside of that, there are new programs. As I understand, the millennials are using Xero. I have not looked at it yet, but they say that it's a good program. But a lot of people know QuickBooks. They know Intuit and QuickBooks. And from an accountant standpoint, it's a good structure, and it does gather the information that you need. It gives you the critical reports you need, your profit and loss, your balance sheet, the things that the outside world will need from you. So it's good to track that stuff early. And as I encourage my small businesses, is that the sooner we get you in a system like that, the better you are. Because you never know what you want to do in your business. You don't know when you need that line of credit, or you're like, you could have a massive explosion in your business and you're like, oh my God, I'm growing so much, I need that. If you don't have financials together and you're successful, I tell my clients, they're looking at you like, okay, are you really in business? They're looking for you to look like you're in business and to present those financials. So I encourage my businesses, I start with startups from their day one, because the sooner you have those financials, when you need them, it's like anything else. When you need it desperately, nobody's there to help. So start it off right and get, in a system. QuickBooks Online is wonderful. It really helps an accountant to work with you. So that's, one of the things I would promote. Best recording practices is, truly getting a system, so that way you will know how well you're doing. Is the business successful? And the sooner you get an accounting system, it allows you to do other things as far as tracking the activities of your business, to say, okay, if you have 3 branches of your business, you're selling 3 products, how successful is the product? If one is not, it allows you, because you've been tracking it, to say, okay, you know what, I'm gonna eliminate that one. So that's what it's useful for. So it's important to track all of your expenses. So bookkeeping, as far as bookkeeping, hire somebody or not. This is what I say about hiring someone or not. If you don't know what you're doing, hire somebody. Because if we get the books when you've made a mess, it costs a whole lot more. So it's better to just say, okay, I'm not good at that. That's not my area of expertise. Then engage someone to do it for you. But the key is someone who knows what they're doing, because a mess can really turn into a mess and a disaster for your business. So, and how it helps in tax season is that it's done, the financials are there, the tax return can be done that much faster.
Or you want extension.
Yes, or you go in extension, which I also do encourage that to people. Sometimes my clients are not quite ready, or we don't have the financials ready because either they were too busy to provide what they needed to do, and so we do extension. But I also do it because sometimes people, the cash flow, we didn't put that in here, but cash flow is a critical part of your business, and sometimes cash flow does not allow you to move as freely as you were expecting to move. So I'll just put it at that. Document retention, what should I save and how long should I save? As far as the tax side, for taxes, it's 3 years after the filing year. So you should keep your tax return for that long. As a practice, retention, because I've worked with auditors as well as the tax side, we typically keep our records 7 years. So then every year we shred one out. So that's what our practice is, and that's what I still do.
Okay, thank you. I am mindful of the time, so I'm going to ask Mishkin to plow away at the tax.
Okay.
And then we will take questions. So I know those of you are jumping out of your seats, just hang on.
Okay, I will, this was actually Joan's part, but just very quickly, anytime you have an entity like a partnership or a corporation, you are going to have to file a tax return. And I think what Joan's pointing out here is, you know, the partnership is the 1065, the C Corp is the 1120. If you want to understand more about how the tax forms work, the 1120S, which involves an S Corp election, or the Schedule C, which links to your individual income tax return form 1040, please see us afterwards, okay? Getting into my part of the presentation, let me just quickly ask, how many people anticipate that they may be doing transactions that involve currency that is not US dollars? Show of hands. Okay. This is critically important for you folks. Previous to my employment at the Wolf Group, I actually ran a tax firm in Switzerland and in Austin, Texas. And what you have to understand is that when you do services in a foreign country, for example, I would go to Geneva and I would say, hey, I'm going to represent client X. Well, client X has a location in Geneva and then one in Chamonix. So now I'm in France and I'm in Switzerland and getting paid in euros and Swiss francs. Well, there's the practical aspects of what do I do when I get paid in a foreign currency? Do I put that into a foreign bank account? Is that wired to my Wells Fargo bank account? Do I have a currency gain or exchange there? And then how do I deal with that from reporting to both Switzerland and France and to the United States, because you're taxed on worldwide income? Well, I can tell you it can create havoc if you just go with the basic QuickBooks version. You really need to kind of make sure that if you're going to use multiple currencies, you look into some of these other companies like Xero, Wave, Free Agent. I don't have a favorite one. I don't recommend one. My advice is just figure out what kind of company you are, services, products, etc. Look at the background of these different companies or some other company and make sure you find the software that's good for you if you're going to use currencies that are not USD or in conjunction with USD, okay? And then I've listed some questions just to think about when you're considering an accounting system for multiple currencies. Okay, tax year. Typically when you start a business up, and when I say a startup, it's typically year 1, but startups can also refer to 1 through 5, because that's typically the startup period, years 1 through 5. But in year 1, you need to make sure that you choose whether you're a calendar year filer or a fiscal year filer. I find that most startups and small businesses will always choose the calendar year because it's easy. It's commonplace. Most people do it. The fiscal year is only if there's something going on in your business that you need to kind of change the year that you're filing on. And I'll give you an example. The Wolf Group, we are a fiscal year filer. Why are we a fiscal year filer? Well, we do a lot of tax returns at the beginning of the year and the end of the year. So I don't want to sit there and do financial reports and send Joan all my information and try to work on that at the beginning of the year, the end of the year. I want to do that in June and July. So our fiscal year is July 1st to June 30th, and we do the year end right there at the end, and then in the middle, and then we do our strategic planning to set the next fiscal year. Okay. So if you're in a business that has that type of activity, you may want to consider a fiscal year over calendar year, but you probably want to determine that early on, because to try to switch over with the IRS is really difficult. It's this really complicated form called 1128, and most people are unsuccessful. Okay. Employment taxes. Employment taxes are super scary, and there's one part that I'm going to definitely say pay attention. But if you have employees, so you're a G4 visa holder, you have a company, you have employees, and I stress employees, not independent consultants, you have to pay payroll taxes, okay? And payroll taxes break down into two slices. There's trust fund taxes and there's non-trust fund taxes, okay? Non-trust fund taxes is what you withhold from your employee's salary to pay the government for income tax, Social Security, and Medicare, okay? Non-trust fund taxes are the employee portion of that. So there's a match. The employer portion. The employee pays part, the employer pays part. So trust fund, non-trust fund, okay? What happens with some companies is they get into financial difficulty and they say, I have all this money sitting here to pay payroll. I'm not going to pay the payroll. I'm going to pay off all my debts over here and I'll make it up the next quarter or I'll make it up the next cycle. And what happens is that creates havoc on your payroll reports, which is Form 941. You have to file 4 of those annually, 4 quarters in the year. When you do that, the IRS will catch you. I used to work for the service. We've caught many employers that have done this. If you do it over multiple years, you could get charged criminally for doing it. The reason why is because you're technically a trustee in regards to the trust fund taxes. So you're a trustee for someone else's money. You're required to take your employee's money and hand it over to the IRS, and if you don't give it to them, you're embezzling those funds. And so the first thing they're going to do, and I'll give you an example, let's say you owe $50,000 in payroll taxes, $30,000 of which is trust fund. The first thing they're going to do is they're going to assess the $50,000 against the business plus interest and penalties, and then the second thing they're going to do is they're going to come after you as the business owner and anyone that was doing the payroll, so it could be a non-business owner payroll person, and they're going to assess the $30,000 to you individually as an individual person, okay? And that hurts bad. So that's called the trust fund recovery penalty. So if I could tell anyone one thing to take away is always pay your payroll taxes. Don't ever slip on that, okay? The other thing to be aware of is that there's an unemployment compensation return called Form 940. It's filed annually. It's pretty easy to do. I used to have high school students create these forms for small businesses. So make sure you get that one done as well too. Okay, so I think this is the one that a lot of people in this room are probably want to learn the most about, which is I'm a G4 visa holder and I want to go into business with my cousin that lives in France or my G4 dependent visa spouse or a US citizen. What's the best entity that I can do, okay? And I'll tell you right now, if you're a G4, you don't want to be in a partnership, okay? G4s and non-residents are taxed the same. And if you're into a partnership with someone that's a non-resident and you're a G4 visa holder, the rules are pretty complicated. There's a lot of withholding that you have to do and a lot of forms you have to file. And what I typically see is these folks end up paying me more as the accountant to do all these forms than their actual gross revenue that they made in the partnership during the calendar year. Okay? And so I just say, I can do this for you, but it's going to cost more than you actually made, so what's the point?
You don't want to make Mishkin rich, right?
Yeah, you don't want to give me money, that's correct. The C Corp is also not a really good entity for G4 visa holders. Well, real quick, back to the partnership. If you are a green card, for those green card and US citizens, it can be a good method of starting up a business, a partnership, especially if you're looking for investors. Where I came from previously in Austin, Texas, we had a lot of startup entities use the partnership model, limited partner, general partner model to start up a business. So, on the flip side, for green card holders and US citizens, there are some benefits to it. C corporations generally, we're talking about a lot of shareholders, a lot of folks involved. If you're going to get like 300 angel investors, C corps are great. But again, for G4 visa holders, not so good. The reason is because the dividends that are paid to you are going to be withheld at a very high rate, and it's probably going to be more than the actual tax that you're going to have to pay on it, so it's going to force you to file a 1040 NR return to get the tax back. Additionally, if you are a G4 visa holder or a non-resident, you are required to file with the corporate return Form 5472 if you have 25% or more of the shares, and your failure to do that is a $10,000 penalty. And you'll notice with the IRS, everything's a $10,000 penalty. Okay. S corps, unfortunately, G4 visa holders and non-residents cannot be shareholders in an S corp. Those are the rules. Sorry about that. For single member, green card holders, and U.S. citizens, I really like the S corp. That's my preferred model right now. In fact, I've got several individuals that retired from the World Bank, G4. They became green card holders. And we have them in S corps right now just because they make a substantial amount of income, and it's a really good setup for them right now. The last one that I'll talk about, which I think is the preferred method for a G4 visa holder, is the disregarded entity LLC, which is Schedule C sole proprietorship. The reason why this is so good is because non-resident aliens and G4 visa holders don't have to pay self-employment taxes. So there's no Schedule SC, which gives you a competitive advantage to the green card holders and the U.S. citizens that do have to pay self-employment taxes. So that's a really good one to do if you're going to be a G4 visa holder and you're going to start a business. I will say though that if you do start it up and you don't do anything with G4 visa holders, disregarded entities are very good. It's a very good option. Okay. For green card holders, this is a bad option. I would not be a Schedule C. Okay. I will say one caveat. I have had some people in anticipation of retirement go ahead and register the company and then tell me they've had it for 3 years. The problem with that is that if you don't do any activity on it, you're required to file the 5472, and now you're 3 years behind because you have to show that you're the 100% owner, and that's a $10,000 penalty. So, okay, I'll fly through this, and I'm happy to talk about it further if you want. But the reason there's not much detail here is because the White House and the GOP haven't really given us much detail. They like to talk in just flat sentences, like a one sentence, like we're going to repeal the death tax. Well, I don't really know what that means. I don't know how that coincides with all the other stuff. But I'm giving you kind of my thought process on the difference between their two plans. So this one is what we call the White House plan, and I'll refer to it as the White House plan. And then there's the GOP blueprint. Okay, so there's two different plans floating around out there, and they kind of butt heads a little bit. The White House plan is very simple. It wants to bring the corporate tax rate, which is pretty high right now, it can be between 30 and 35%, down to 15%. It's a flat rate. And all entities, partnerships, corporations, Schedule C, they'd all be taxed at 15%. They would eliminate the alternative minimum tax, but in order to get this favorable rate, you're going to lose a bunch of deductions. So maybe you're not going to be able to deduct my fees. Maybe you're not going to be able to deduct the registration fees. You're not going to get certain credits. They do want to switch to a territorial tax system for just corporations. So again, I don't know how that works, where citizens are taxed on worldwide income, but corporations are taxed just within the borders of the United States. I think that will lead to a lot of tax evasion, so I'm not sure how that would work.
That's useful for tax.
Yeah, well, I mean, hopefully they just switch everything to territorial, and then we don't have to worry about worldwide taxation, and all your foreign holdings, you can just keep those in the foreign jurisdictions. The difference, though, between the GOP and the Trump White House is GOP is a little bit different. They still want graduated tax rates, so they still want to make it complicated, kind of, if you're here, then this, if here, then that, with a maximum rate of 20% for corporations. And then if you have an active pass-through, so an active partnership, which again, I don't know how you define that, 25% is the maximum rate. Now, they have a safeguard in place to make sure that people don't abuse entities, and basically it says that if you have these pass-throughs, you're going to be deemed to have a certain portion of reasonable compensation or wages that are going to be taxed to you as an individual at the highest rate of 33%. They also want to eliminate the AMT, so if I were a betting man, I would say the AMT is definitely gone. And less credits and deductions, just like the White House plan. And then they do have this weird thing called the destination cash flow based system, which I think would wreak havoc between the states and the federal government, but I won't get into that because again, it's very broad level. We'll just leave you with one thing. The last census that was done on small business startups was 2014, and in that year, 670,000 businesses were started in the United States. And on average, small businesses create annually 3 million jobs, whereas large established corporations eliminate annually 1 million jobs. So entrepreneurs like yourself that are starting small businesses, you are very important to the U.S. economy. And I hope that we've been insightful and informative to help you find your way through this path so that there are no unforced errors or unanticipated mistakes. Thank you.